What's going on, everybody? We are back again with another video. So today we are going over my full strategy on how I was able to take two payouts within 10 days over $3,500 and making $5,000 with only trading 17 days out of the month and only 2 hours a day. Let's get into it. First things first is we're gonna go over the 7-step process. The very first step is mark the London session high and low and watch for the clean break before planning your setup. Okay, so we're gonna go through it and I'm gonna break this completely down for you guys. We're gonna go through every single step, the nitty, the gritty, everything, so that way you guys can understand it and you can use it for your own good to make money if you would like to. All right, so first thing we're gonna do is we're gonna go to, all right, we need to find the London highs and the London lows. So there's two ways to do this, okay? The only two ways that I would technically recommend or even think to do is go to your indicators. First things first is you have to have TradingView. TradingView is just a platform where you can go in, you can chart up your charts, you can use rectangles, you can use squares, you can use lines, trend lines, different things like that to help you understand which way the market is going, and it helps you understand what way you need to buy, either up or down. All right, so there's two indicators that you want to use. The first one is called kill zones. Okay, all right, so when you click on kill zones, this is what will pop up. All right, so right here, I actually already have it on here, but I'll just delete this one so I can show you what happens. All right, this is what pops up here. All right, when we come into kill zones, what we want to do is we want to go into kill zones right here, and we want to press the setting button. All right, we want to turn off all of these other than the London session, New York, and New York. Everything else can go. All right, so this is what it is, right? We just want to keep London, and New York, Tokyo, and Tokyo can go off. All right, so what we're going to do is we're just going to click OK. The other indicator is called sessions. I already have it in my favorites. It says sessions on chart. All right, so if you click session on charts, it'll pop up over here and it will pop up something like this. All right, all your sessions will pop up on your charts. This is the way that I would prefer you guys to do it. Kill zones are pretty nice, but this is just another option and it gives you more details than the kill zones. So if you go into the settings inside of here, what you want to do is you just want to keep check the London session and the New York session. Tokyo session and Sydney session do not have to be checked. Okay, all right, so we're just gonna hit OK on that. And the reason behind this, right, and let's break this down for you guys. All right, so this green one right here, and let me go in and change these settings on this border. We don't need that. We don't need that. All right, this is London session. Okay. All right, so from here, 3 a.m., 8 a.m., right, this middle gap can be considered a part of London session as well. All right, but what we want to do is we want to look for the crossover area. All right, the crossover area is this brown area. All right, and what I mean by crossover, that means that, all right, London plus New York. All right, London plus New York. This is where the crossover happens within this brown zone. And what I mean by crossover, I mean volume. Right, London session here, the crossover is here, and this is New York session. Okay, what this means for you all is the most volume is in the crossover section. Okay, so let me just kind of give you a glimpse of what's happening here, and I'm just going to show you why this means what it means. Okay, so when we mark the high and the low of London, right, this here and this here is where we want to mark. All right, I typically come back here to use this last portion where London session starts on the actual sessions, and this is why I don't use the kill zones, but that's just another way for you to use it. All right, so you're gonna find your 9 o'clock candle. All right, here's the 9 o'clock candle. We're gonna come down here, right? we're gonna grab our box, right? Our box is over here for people that don't know. If you come to brushes, you click and hold on brushes, find rectangle right here. All right. So what we're gonna do is we're gonna mark the high and the low of London session. So the London start of London here, the 9 o'clock candle is the end of London session. Okay. And what we're gonna do is just gonna move this right on over. Right. So we have our high here and we have our low here. Okay. And as you can see, the market is going sideways within London session. All right. It's just going sideways. It's not moving. No real big ups and no real big downs in London session typically, right? But what we see here is inside of this brown box is where all of the volume typically happens. The market shoots up and up and up, or shoots down, down and down. Okay. So let me show you a different example, right? As you can see it again, London here, as soon as we get into the brown areas, we see big downtrends and we see big uptrends and then big downtrends, right? This is the volume, right? In these sessions, same thing here, right? All right, we got our high, we got our low. As soon as we get into the brown session, right here, we start to see big uptrends and big downtrends, okay? All right, it happens all the time. Sometimes it doesn't happen, sometimes it does happen, all right? Over and over and over. Same thing here. London session, as you see, it's going sideways. We're just moving super big trends up. We get into the brown session and then starting to move sideways, okay? But that's okay because some days it doesn't happen, some days it does happen. But right here, as you can see, after that 9 o'clock candle, which is this one, the market just shot all the way up because this right here is where the volume is inside of the market between 9:30 and 12 o'clock. All right. So remember that. Actually, let me show you one more. Right here, let's find our 9 o'clock candle. 9 o'clock candle is here. All right, we're looking for our high and our low. From the start of the green, the high right here, and the low. As we all can see, as soon as it broke out of the low, right, it broke out, went back up, came all the way back down. All this volume, this is money. All this is money here. Money, 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 right? All this can be money that can be made if you decide to get into play, right? So that is the first step of the strategy, okay? So we mark the high and the low of London, all right? So again, this is the crossover area where all the volume is. This is London, and here is New York. This is the crossover. Remember, all right, go back to your indicators. Make sure you find sessions on charts, and it's by this guy here, sessions on charts. So that's something I would recommend. I would recommend getting. Okay, so what we're gonna do is we're gonna go ahead and mark our high and our low for the play that we are going to look at. All right, so here is 9 o'clock. All right, we have our low down here, the start of the session, and by 9 o'clock, we right here, we have our high up here. Okay, so we got that. Let's go. We can go ahead and check that off. All right, number 2, mark clean support and resistance on the 5 or the 15-minute, and only trade levels where break and retest hasn't complete yet. Okay, so let's break this down. All right. So what I want to do is I typically don't go back too far, but what I like to do is I like to mark levels where break and retest hasn't complete. Okay. So let me just give you an idea of what a break and retest is, right? So we have, this is the chart, right? Let's just say that the chart is moving sideways, right? Break and retest is we have resistance up here, okay? We have support down here. Support is always on the bottom. Resistance is always on the top, okay? What I mean by break, I want the market to break out of resistance or break out of support, whichever way the market decides to go, okay? Now, typically what happens is once it breaks out of resistance, the market would just fall back down to where it came from, consolidate a little bit, and then push back up right here to the level that it started to drop at, okay? So again, this is the market, all right? This is resistance, this is support, okay? The market broke out of resistance. Sometimes it consolidates right around here. Sometimes it doesn't. Sometimes it just falls right down. This is the zone that we wanted to come back down to. We want to see consolidation before it moves back up, and we want to see the market move back up to the actual spot where it started the downtrend from originally. Okay, so that's just a nice little graph for you guys to kind of help you out. All right, so when we find support and resistance, so when we find support and resistance, we want to find it after a trend inside of the market. And we also want to find it when the play hasn't played out yet, okay? So the first step of this, we want to see the break, okay? All right. Second step is we want to see the market consolidate or stop moving up. Third step is we want to see the market come back down, right? Fourth step, we want to see the market consolidate a little bit, all right? And then the final step of the break and the retest, we want to see the market shoot back up to where it came from, right here. So super simple, nothing hard at all. We're just looking for the market to start going sideways first, then we wait for the break. But when we are finding support and resistance, right, for the break and the retest, we want to find it to where the play hasn't actually fully happened. So let's just say we find support and resistance that looks like this, okay, right? So we know that there is a missing step right here. The missing step is for the market to come back up to finish the play right here, okay? Or hypothetically, right, let's just say that we wanted to find a play here, right? And the play is moving back up, right? Let's just move these back up, right? The play, right, is stopped up here. So now we know that this play has potential to come back down, move to the right, and move back up. So we always want to find where the play is not fully done, right? Okay, so let's look at it. We don't want to go back too far, but we want to go back far enough to find where we can find support and resistance at. And we always find it after a big uptrend or after a big downtrend, okay? Same thing here, big uptrend, right? Or a big downtrend, right? Now, once these downtrends and these uptrends happen, okay, we want to see the market move sideways. So I'm just going to find us some support and resistance here to kind of help us break this down here, right? All right, so we have a big uptrend here. And guess what the market is doing right now, right? It's moving down and it's moving up. It didn't come back down and it didn't come back up. But what it did was break, okay? So here, let's show you, all right? And the way that we draw support and resistance is we want to grab our rectangle tool. We want to drag it all the way over until we see, you know, it's fully fulfilled what's going on right here, right? And when you make these, what we want to do is we want to make them halfway on the candle and halfway on the wick. So what we're going to do is we're going to bring this down a little bit. It's on this candle and it's on this wick right here. So that is perfect support and resistance. All right, so we're going to do the same thing for this one right here. All right, so remember, all right, support is at the bottom, resistance is at the top, okay? So just like we went through, y'all, right? We see a break right here. This is the break that happened, okay? So here, all right, it broke out of resistance, all right? Here's resistance, here's support. It broke out of resistance. The second step was for the market to come back down to the zone that it came from, which it never did, okay? Never came back, which is okay. So that means that this play is technically not done yet, all right? So what happened was it went all the way up, came back down, started moving to the side. Consolidation, 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 okay? And mind you, this blue area right here is technically in the middle of the night, right? As we can look down, we'll see 6 o'clock, we'll see 7 o'clock, we'll see 8 o'clock, 9 o'clock, 11 o'clock. All this is through the entire night. And this green section right here, remember, this is London session, starts at 3 a.m. All right, so we're technically not up at this time. So what we're going to do is we found our support and our resistance. We're going to move over to step 3 because this play is technically not finished just yet. All right, we looked at step 1, which is mark the London session high and low. Watch for a clean break before planning your setup, okay? Number 2 was mark clean support and resistance on the 5 or the 15 and only trade levels where the break and retest hasn't completed yet. Okay, so we'll just go over one more time just so you guys can understand it, right? Support here, resistance here. Here's the break. It broke out of resistance. The second step, as we went over, is for it to come back down to the zone. The third step is for it to consolidate. And the last and final step is for it to move back up to where it came from, which technically there's 2 ways to get in this play, right? We can get in on the way back down. We can get in on the way back up, right? I never get in on the actual break, okay? So let's move to step number 3, higher time frame trend lines. On the 1 hour or the 4 hour, draw trend lines with 2 to 3 touches to confirm overall market direction, okay? So that's what we're going to do. We're going to go to the 1 hour, okay? All right. And we're going to look for at least 2 to 3 touches, right? So if we look over this way, all right, 1 touch, 2 touch, 3 touch, 4 touch, 5 touches, right? These don't all line up, but what we're going to do is we're just going to draw these touches on the way up, all right? So what we're using, this tool is called the Ray tool. If you go over here, you click and hold on your trend lines and you click on the Ray tool and just favor it. Once you favor it, you'll be able to see that the actual Ray tool pop up in your tools. All right, so this is point A, this is point B, okay? As you see, these points don't touch this trend line. So what we'll do is we'll grab our Ray tool one more time and we'll grab point B and drag it to the next point that actually touches, all right? Same thing here, all right? Grab this point, drag it up until it actually touches this line. And I always make my upwards trend lines up, all right? I always make them green. I always make my upper trend lines green and my downwards trend lines red, all right? So we'll go over here, we'll make this red. Same thing with this one, right? And then this touch here, I grab from here onto here, all right? So that looks about right. Everything looks good. The trend line is good, right? We've been on this trend. Every time the market comes down, it goes up, comes down, it taps into this trend, comes down, and go again, goes up, right? The market is just trend lines, right? It's all about the trends. Same thing here. Been on a really big uptrend, and now we're back on a downtrend. Okay, so once we see this start to break these trend lines, that means that it is no longer on this uptrend anymore. So it will break this trend line and the trend will continue on the way down. All right. So steeper entry trend lines. All right, this is the next step. Step number 4. On the 5 or the 15-minute, draw a steeper trend line to pinpoint where the pullback is ending. Okay. All right, so we're going to drop back down to the 5-minute. All right. So as you can see, the 5-minute gives us a lot more detail. All right, so we're just going to fix these trend lines on up that we got. Move these, make sure these are a little bit more precise. And we're going to move this in a little bit. All right, so move that in. All right, we'll line that up with that one. Okay. We're going to bring this on up. We're going to line this up with this one. And remember, we're going to make these green because these are going up, not down, right? Our downwards trend lines look pretty good. All right, just moving on down, right? The market hasn't moved on up just yet to break this one, but we are looking at the market to move down. Remember, keep in mind, this is still the break and the retest. These are just extra things we can use for confirmation to help us understand where to get in the play at. All right, so we did step number 1. Mark the high and low. Step number 2, support and resist. Step number 3, higher time frame trend lines. Step number 4, steeper entry trend lines on the 5 and the 15-minute. Step number 5. All right, so this is where we turn on our indicators. Our indicators for FVGs, IFVGs, and order blocks. This is the most important part, so pay attention. Okay, so what we're going to do is I already actually have these indicators on my chart, but I will go ahead and show you where to get them from. So go to indicators, and what you want to do is you want to turn on what it looks like FVG by Nephew Sam. Okay, you want to scroll on down. You want to find where it says order blocks right here by Flux chart. So we type in order blocks. I already have it favored. Order blocks by Flux Charts. That's another one. And those are the only two that we would need for this precise entry. Okay, so if I go over here and I'm just going to unhide this one, and I'm going to unhide this one. All right. So remember, we don't get confused. We got our London high marked, and remember, the volume happens in this time, right? So from that 9:30 candle until about 12 o'clock. All right, we do. Second thing is we have our support and our resistance. We have a break, but no retest just yet. So we are predicting that the market is going to come down. All right. We go back to number 3, right? We have our higher trend lines. We have our lower trend lines. And now it is time to predict where are going to enter the market at, okay? So let's talk about IFVGs and let's talk about FVGs. IFVGs are called inverse fair value gaps, okay? FVGs are fair value gaps, all right? So if we go over here to this indicator and we click this, right, you always, majority of the time, once you click on this indicator, you won't see show IFVGs on the chart. Only thing that you will see is FVGs, show FVGs. So you have to go in here, you have to click this, okay? So let me just kind of give you a brief example of what inverses are and what IFVGs are, all right? Let's give you a brief description of what each one of these is, all right? So what creates fair value gaps are institutions, okay? So let's just say hypothetically, right, we have this candle, all right? Okay. And then we have wicks inside of these candles here, because wicks are always going to be in candles. You will never find a candle that does not have a wick on it, either at the top or the bottom, all right? And I'm just going to break this down so you guys can understand it, all right? Let's say we have these candles. This is the first candle, this is the second candle, and this is the third candle. And the market is shooting up and up and up and up and up, right? Fair value gaps are made up of 3 candles, right? The fair value gap is the gap between this wick, the top of this first candle wick, and the bottom of this candle right here, the wick of this candle. If you ever find where the market has wicks that looks like this, and there is no gap between this wick and this wick, there would not be a fair value gap that populates here. All right, so let's break this down for you. Bring this wick back down, all right? So when we see fair value gaps, we see it start from the bottom of that candle to the top of this wick right here. And anytime you see a fair value gap, you're going to see it populate with the actual indicator. It's going to say FVG, okay? And this is what happens when the market gets pushed up by institutions. You have huge candles, all right? And let me just give you a brief example of it, and then we'll go back to the drawing so I can show you why this is. All right, so let's just look at this. All right, we have this candle with this bottom wick right here. Let me zoom in a little bit more. All right, there we go. This candle with this bottom wick, this candle with this top wick, and as you can see, it made a box that says FVG right here. All right, same thing I drew up top. This is the same exact thing, but just with candles, okay? That's all it is. It's FVGs. That's just the institutions pushing the market up or pushing the market down. Whichever way you want to look at it, that is what the market is doing, and that's what the institutions are doing. And that, when that happens, typically it leaves the retail traders behind, right? So most retail traders are saying, okay, I'm going to shoot it up. I'm going to let it go all the way up. Okay, I'm going to let it go all the way up. And then I'm going to wait until we have a downtrend, right? Now, hypothetically, there's 2 ways to trade fair value gaps. This is the first way, and this is the way I don't trade it. I trade it the second way. I trade it off of inverses, not fair value gaps. Majority of the time, you will have another candle that forms and is red, and it will bounce off of this fair value gap that it created and then continue the volume up. I don't like trading like that because typically when the market is pushing this up, all right, and it creates the fair value gap, the market will continue up, but sometimes it just falls right through it and then you get wicked out of the play. Okay. So I never like trading off of fair value gaps. I only like trading off of inverse fair value gaps. All right. So let me show you. All right. Just give you a brief breakdown of what this entails. All right. So let's just say that the market, all right, is done going up. No more uptrends. All right. We are finished going up. We want to turn around. All right. So what happens here is, all right, when we get a huge candle, all right, that comes back to fulfill the fair value gap that it created, guess what happened, guys? It turns into a inverse fair value gap. All right. And I'm going to show you, all right, what we want to do in this situation. All right. So this right here will turn into an inverse fair value gap, which means that this will no longer be IFVG. Well, this will no longer be FVG. Sorry, this will be IFVG. Okay, it will have an I in front of it. So I'll give you a brief look at what that looks like down here. Right here, you see what says IFVG instead of FVG because the market fulfilled the gap that it created right here, came back down, pushed straight through the FVG and turned it into an IFVG. Okay. So let's move back up. So this is where I would love to enter the market. Okay. What we're going to do is we're going to use our gain tool, and this is still on step 6. Okay. So we turned on our indicators, right? Turn on FVG, IFVG, and order blocks indicators to identify the exact zone price wants to react from. Okay. So number 6, entry trigger. Wait for the FVG to flip into the IFVG and enter only on the 50% retest. Okay. And this is basically what I just broke down, right? Now we're getting into the portion where we are going to enter. Okay. This is the most important part. All right. So what I want the market to do is once we see the IFVG, I want the market to come back to tap 50% into the IFVG and continue down, right? There will be a lot more orders in the IFVG than there will be in the FVG. So I only enter on the inverse, which is the IFVG and not the FVG. Remember that, okay? And a good way to tell the 50% line is you want to click on what we call a gain box. All right. So if you go over here, right under Trendline, right here, and you scroll all the way down, you'll see something that says gain box. Okay, right here. And when you favor it, it'll pop up on your timeline here. Your little toolbox we have. So what we're gonna do is we're gonna grab the top of this corner. We're gonna scroll all the way over, right? Then when you actually first use the gain tool, it is going to look like this. All right. All these boxes most likely probably will be checked. Okay. All these boxes will be checked, and it's going to look something similar to this. All right. This can look a little scary, but believe me, right? It's not. So we're going to uncheck all of these boxes. All right. We'll uncheck all of them. All right. Only ones that we're going to keep checked is 0, 1, 0.5, and that's it. Okay. So 0.5 is the 50% line on the IFVG, and this is where I want the market to come back to. Okay. All right. So ideally, we wanted to see it come back here, bounce off of this, and continue back down, and that will be our entry for the market. All right. And then we just work all the way back down. Okay. So that is the setup for it, right? So let's actually see it happen in real life. All right. With candlesticks. So again, we still have not seen the market come back down to the zone it came out from. So we are predicting that the market is going down. Second thing is we are waiting for this volume to happen. So ideally, the market will give us more volume, which is a guarantee 80 to 90% of the time that when it does happen at that 930 area, then at that point we will see the market do what we predicted it to do. Okay. All right. What we're gonna do is we're gonna let this play out just a little bit. We're gonna tap these candles, and as you can see, right, this trend line has been broken. Okay, so the market just continued down, 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 down. It has been broken, but we are still not entering. This is the 905 candle. This right here is the London low. Okay, and this up here is the London high, right? The 905 candle, right? We see it coming, right? We seen all of these fair value gaps. These blue, actually green, I'm sorry. These green fair value gaps. These blue ones are IFVGs, and sometimes they do stack on top of each other. But every time this market comes down and fulfill this gap, it's going to turn into what we see in IFVG. But remember, right? We don't enter as the market is falling. We enter on the pullback, okay? All right, so, right, what we're looking at here is we're going to use our gain tool, right? And we seen if we drew, right, this gain box around this, guess where this candle closed? It closed above the 50% line, which is not something I love to see. And this could still happen that the market still falls back down, but this is not a part of the rules, so I'm not going to take that play. The majority of the time, once it closes above the 50% line, it still has potential to go up. There is a potential that this market will fall down, but just hear me out, right? Just make sure that you are taking the plays based off of the rules, okay? So yes, this market may continue back down, but it closed above the 50% line. All right. So yes, it continued down, all right, continue down again. Okay. So what we're going to do is we're going to continue to draw our gain box tools. All right. And we're going to look for the market to have a retest one more time. And that is when we are going to take our play. All right. Moving on up. Perfect. Here it is. All right. So if we draw this, all right, and this is the catch, okay? The market can have a candle. It can wick above the 50% line, but the body of the candle, we don't want to see it close above the 50% line, all right? So yes, this could have been an entry, but this was not a part of the rules, and we could have seen profit on the way down. I would not have taken that, okay? And again, this is London low, so typically once it breaks that London low, we like to see a lot of volume. So all of our confluences are telling us that the market is coming down. We have a trend line that broke here. We have another trend line that broke here. We had a pullback here, and it continued down. Even though it closed above 50%, we also have another trend line broken here, right? And look what we have here. We have a pullback right here, and it's on its way back to the zone it came from, okay? So let's talk about order blocks. Order blocks are typically where we want to see either take profit or stop loss when it comes to this, all right? So ideally, there's two ways to enter this play. There's an aggressive way. If this market was a live market and the market is pushing up and up and up, you can set a limit sale right here, let the market get you in. Or you can take a conservative entry and let the market fall back down as the market closes below 50% and then go ahead and get in the play. All right. So we're going to sell here, right? And we're going to set our stop loss right up here. And we're going to set our take profit down here, all right? So what we are going to do is we are going to press play to see how this plays out. And then from there, we are going to take profit as the market comes down, right? What we want the market to do is it already tapped into this halfway point. We want to see the market come down to tap into TP. I bring my stop typically up here just in case the market decides to come back up here and tap into this one more time before it decides to come back down, all right? So we went straight into profit right here, okay? It's looking good. It's looking good. Now we may see the market come back up, tap into this one more time, and then fall back down. And if the market falls back down, I'm going to continue to move this down and then move my stop into profit. And then as the market is coming down, I'll just continue to do this, right? As it comes down over and over and over. All right. So until we see that the market is moving in our favor, I'm not going to go ahead and move my stop into profit. I'm just going to leave this here halfway to see what happens in the market. All right, so let's see what happens. All right, so the market came back up. Again, it wicked back into this inverse. It did not close above this inverse here. And now let's see where the market takes us. All right, back down she goes. So we are up $3,500 on this play. So now at this point, I'm going to move my take profit down to the next level, which will be down to this middle of this order block. Okay. So as the market continues down, I'm going to continue to take profit. Remember, I'm only trading with 2 contracts on regular NQ, which is the minis. So let's see where it takes us. All right, on down she's going. So we're going to bring this down to right on top of this inverse. Okay. All right, and this is how you trail your stop. All right. Typically what happens is the market will turn around as it's creating inverses. So we're going to leave it right at the top of this inverse just in case the market decides to come back, tap into that, and continue back down. All right, we're up over $5,000 right now. My stop is at 1,800. So no matter what, all right, if this was a live market, I would be taking at least $1,800 off of the play. Okay, so let's see where it goes. And again, TP number 2 would be here. And I will probably just go ahead and take profit at TP2 if it hits it. TP2 has been hit, which was close to over $9,000 on this play. Again, so that is the full entire strategy, everyone. All right. The first portion of the strategy is mark the high and low of London. Second part is support and resistance. Third part is the higher time frame trend lines. The fourth part is steeper entry trend lines. The fifth part is turn on your indicators to get the precise entry. The sixth part is the entry trigger, right? Wait for the FVGs to flip into the IFVGs to enter only on the 50% retest, right? We seen that happen. Take profit plus trail stop. Take profit at the next key level and trail your stop behind price to lock in gains, right? And again, if you want to look at this play, you can go back and look at it. It is for NQ, November 5th, 2025. So that is the play, everyone. I would suggest go ahead and go practice it over and over and over. The more you practice it, the better you get. And right, we did see the market eventually come back down to the zone and go ahead and tap into the zone to get us a lot of profit. All right, y'all, thank you for watching. I hope that this video helped you tremendously. If you have any questions, feel free to contact me via Instagram at Lunch for Trades, or check out my website at www.lunchfortrades.com. We trade like this every single day, so don't hesitate to join the Discord. I'll see y'all in the next video.